Hello viewers, welcome to Diamond Investor channel. Today I'm going to discuss about two dividend stock which is traded in London Stock Exchange and also New York Stock Exchange. Have a huge market share in both market, USA and UK as well. One based on UK, one based on USA. So if you like to invest in dividend stock, I think you're gonna like the video and the content like this. So let's go. I don't want to take more time. Let's dive into the chart straight away. So one stock is GlaxoSmithkline, which is a UK stock. The price valuation at the moment is $14.7. If you check from the top, at the moment the price gone down 27%. So if I go to the market structure, what's going on in the market, what's the analysis and what's the finding I can find about this company. So we can see it's trading at the moment 59.4% below the estimate of the fair value. We can see lots of other things. Earning forecast grow 14.23% per year, and have a high level of debt. Dividend is 5.42%. 42% is not well covered at the earning, a large one of payment, and we got some risk analysis from the data. So if I go to the summary, this is the summary, and if I go to the valuation, there's the valuation coming up now. So valuation saying is at the moment 59% undervalued, so it's a huge potential to grow more. Past performance, if you jump into that, let's see what's the past performance. We can find out. So they did perform well, 37.4%, but if you deep dive, actually last year they didn't did well. It's 34.3% last year earning, though they doing good and growing, but still they didn't make that much good enough. So there's a risk I can show you here. Return to equity. So if I check the past performance, I can check about the return to equity, how much they did, what they did in last year. So you can see, sorry, beg your pardon, it's the future one. I go to the return to equity at the moment, past performance. So well, that's what they did last year. So it is 23.5%, and return on asset is 6.7 and 14.7 on return on capital employed, which is not bad. So at the moment, why the stock price is really down, the reason behind it is they have a huge level. So lots of people thinking, oh, that's crazy, this company can be bankrupt. Actually, it is not the truth. This is one of the very old pharmaceutical company from UK. You can see in 2018 their debt to equity ratio was 487%, and it kept growing, and 2019 it was 1127% compared to debt to equity ratio. So they had huge debt at that moment, but afterward you can see the debt gone really down. It's 118%. So you can see that there's a significant change happening from last year to this year. So I think like maybe next year or in a couple of years they're gonna catch up. The equity gonna be higher than the debt. Okay, so if I go to the cash flow, what's going on with the cash flow, that's the main important part we need to look around, how they're doing, how they're growing. The cash flow at the moment is 24.9%, which is really good, and they have also reduced their debt like 462% to 118% over the past 5 years. Though the debt ratio is considerably high, but I think they're paying it back very nicely, and I think they're using their debt very sensibly. Okay, so jump into the dividend. What's going on with the dividend? You can invest on the company, especially because of dividend. I need to know about how they're doing about the dividend. So I can see it's 5.42% at the moment in here. If I check in other metrics in other platform, I can see at the moment showing like 5.5% as well. So it's like not bad. So if I check another things, if I check about the dividend, so I need to check about the current year, what they're paying. Currently they're paying a 91% dividend, whatever the earning they have. And if I check the future shareholding ratio, so it's 43%, so there's more upside to grow the dividend. So that's what I want to focus on. So I think that in the future we can grow their dividend. Not whatever they're doing now, we can get a bit more better pay from them. So what's going on about the insider? Are they buying? What they're doing? Are they holding? Are they selling? So you can see lots of movements here. Insiders bought, sold a lot. So if I go in depth, you can see most of the people, insiders, they actually bought the stocks rather than they're selling it. So there was some selling in here. You can see one guy sold 31,000 share, and other one I can see again, like he bought more than 36,000, and some sale was 88,900 something, but people are buying 15,000 and 3,000. You can see more sell and buy here. Buy is more, so I'm focusing because the insiders are buying this one, so I'm really focusing on what the hedge fund they're doing. Hedge funds is a bit like a mix, because some of them have a huge good exposure on this company, so some of them reduce their shares, some of them increase, so it's like a mix at the moment. But at the top holding, who is holding which fund holding this stock the most, they increase their position like 59%, which is really bullish. But if you check the BlackRock and Vanguard, which one I really prefer, they didn't reduce their position not that much, it's less than 1%. So I think they just trim the position because of the stock price, for any other reason, maybe because they want to reposition their allocation. So if I go to the second one, which is USA based company, which is Welgreens and Boots at the moment, and 48.48 USD. They have a good future prospect as well. They are the company, actually we know it in the UK and USA as well, both, that we have lots of pharmaceutical, they have retail shops, which one you can buy or lots of like not only prescription drugs, lots of toiletries and cosmetics and lots of other things. So they are doing very good. And also they in their Boots shop you can go and get the vaccination as well, so they're doing very good at the moment. So if you check about the metrics, we have lots of good things coming up here. You can see they're trading on 60.8% below the estimate fair value, and earning forecast growing is really high, 21.7%. earning growth 333% over the last year. Because of the pandemic, it was really good, and the pay high reliable dividend, which is 3.99, is really good. They have a good debt as well. So if I go to the valuation again, just double check this thing, so you can see the valuation at the moment is 60% undervalued. So if I want, as a value investor, these two stocks, Welgreens and the GlaxoSmithkline, was really undervalued and not performed that much well because of the huge level of debt. So most of the investors, they take out their money and the price gone down really huge. So there's a huge upside. If you check the value investor like Peter Lynch and Benjamin Graham, you can see some very underperformed stock, really neglected by the lots of people. They did perform really well. So for my finding, I found these two stocks which is really have a big market, not only UK, is also have exposure to USA as well, both of them, and plus they're paying a good amount of dividend and also undervalued. So altogether I feel like that's a really good stock to look at. So if I go to the past performance last year, what they did, I mentioned to you here on before, you can see the performance gone really good. It's like going very good. Profit margin in here is looking a bit down in here, but they did very well at end of the 2021 until August. So if you check last 1 year, you can see they've grown like huge, 333%, and at the moment 21% last 5 year company growth, which one if you check are like this. But if you check the dividend and together, the price will be different actually, how much the shareholder got the revenue. I will show you 1 second. If you check last 5 years what's going on, let's see actually, did the people lose money or no? Yeah, people lose money like 31% gone down, so it's really undervalued. But see the last 1 year performance was really extreme, 333% because of the pandemic. And not only that, they also investing huge amount of investment of building more facilities for the elderly people, nursing facilities and stuff, so they're increasing their position there. So they have a huge level of debt, so they took too much debt to grow their business more in the future. So you can see a big progression in future as far as I think. Yeah, so they have a level of debt here, you can see, and on from the chart, plus debt level is considerably high and increased. Debt level increased 23% to 68%, which one I'm saying last 5 years, because they're investing their more money on those growth of their company. They're acquiring more few things like health facilities, nursing facilities, and some of the things in USA. Okay, and their main focus is operating cash flow is 40.6%, which is extreme well. They're just like beating every expectation what the analyst done for last 3 quarters. That's what I find out. And if you go to the financial, after the financial, if I check to the dividend, they're paying a very good dividend like 3.99%, which is really good at the moment. And not only that, they exponentially growing the dividend every single year. And payout ratio at the moment 72%, and next year payout ratio is gonna be 38%, which is really good. So there's more possibility to grow the dividend. So that's why I want to invest on those companies for the dividend, because I want a dividend in the future. Okay, the more important things, if I check, okay, what's going on with the list at the moment. So for the Welgreens and Boots, we can see here what the analysts are saying. Okay, so 10 rating we find out at the moment. From this 10 we can see 1 say buy, 9 say hold, and 0 say sell. Average price at the moment 55, or with the analyst estimate. Similar like GlaxoSmith, if I check what's going on with them, is a moderate buy. So 8 saying buy GlaxoSmithkline, 9 say hold, 2 say like sell it. Their average price estimated at the moment is 16.11. Both of the price, if you compare to the graph today, is below what we are today. So this is the GlaxoSmithkline, and same about the Welgreens Boots. If you check the price average is what the analyst put the price average and estimate, and it is still below from there. So that's all together. That's the things I want to share today. So if you like the video, and if you think this kind of company, which one you would like to invest in, I would say do your own due diligence. I'm buying, for disclaimer, like I'm buying those both stock because I'm living in the UK, so I'm increasing my position GlaxoSmithkline first at the moment as much as possible, and after I open a position for the Welgreens and Boots as well, but I want to grow it a little bit later, because I prefer to do the GlaxoSmithkline first, because I live in the UK because of the taxation reason. So thanks for the if you're still watching my video, thanks for watching. I would say please don't forget to like the video, press the like button, and do comment and subscribe please for more updates. Thank you. Bye today.